I have a solution to your mental game of trading. It's Coffee with Rob. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. And I'm talking to you today about psychology, about the things that go on in your mind when trading. What goes wrong when you start trading? Most of you go out there and you want to start trading today, and you get a course, or you go and you watch a few YouTube videos and you think, I'm going to start trading today because that bloke with the Lamborghinis and the Ferraris told me that I can take $1,000 and I can start trading in the market and I'll make loads and loads and loads of money. Well, at least that's what you believe. Trouble is, you get into the market, you go on the course, you do a demo. You do the demo, you got all these people with you and everything's going well and you're passing. I mean, you get 80% trades right and 20% wrong. You got this win rate. The win rate's insane. You come home, you put real money in the market, leverage trading, you're about to get going. You're ready to get going on this trading journey. You're off and you start trading and you start losing and you start losing some more and you just keep on losing. And you think, last week I was on a course and I learned to trade. And this week, suddenly, I can't win for anything. I can't do anything. I just can't win a trade. Everything's going wrong in my life. And that is the psychology of trading. That is because everything about trading is not about those charts. It's not about those squiggly lines. And it's not about that little course you did that tells you you're going to win money with a win rate. It's all about your fear. It's all about your psychology, and it's all about what goes in your mind. And what I want to do today is I want to talk to you about how you can get past that, how you can get over that. I had a few aha moments in the 33 years that I've been trading. And in those moments, I realized a couple of really important things. It was when a couple of old men like myself, because I was young like you once before, unless you're older than me, which is possible. Old men came to me and said, Rob, you can't time the market. You've got to have time in the market. And I used to think, are you guys nuts? I don't have time to sit here and wait to make profits. I want to make profit now. I can't wait for 30 years until I make a profit. What's wrong with you? Are you insane? I want to make money today. And this is where the problem came in. And I realized that if you want to be an investor, that's great. And disclaimer here, I do have an investment account or a couple of investment accounts that work really well for me because yeah, time in the market really does work. If you leave trades for 30 years, or not trades, but investments, and you set and forget a whole bunch of purchases on shares and things like that, when you come back in 30 years' time, you're going to be so rich, you're going to not know what to do with the money, which is great because those investments are fantastic. Trouble is, most of us want to trade. We want to have a bit of fun. We want to do a bit of trading. We want to be on the trading floor. We want to do the trading thing. When I'm in and out, leverage trading, I want to take $1,000 and I want to trade $100,000 with it. I want to make loads and loads and loads of money. And this is the picture that we have. What they tell you on the course is that a win rate will make you money. They tell you that you can scalp the markets. They tell you that you can make all this money and you're going to win 8 trades out of 10. And this is the problem is, you see, win rates don't make you money, number one. Number one, a win rate cannot make you money. Because you will win 8 trades in a row and you'll win $10 per trade. And on the 9th trade, you're going to lose $1,000. And that kind of puts you in a loss. So that doesn't work. That will never work. Scalping doesn't work because there's no real structure or strategy to the scalping, because scalping is, I get into a trade, it goes into a profit, and I take a profit and I run away quickly and off I go with my profit. I haven't really got a proper profit target. I don't really have a proper risk management system on this. And 9 times out of 10, the people that are scalping are risking far more than they're actually winning, which is the complete opposite to what I'm going to show you today. Because today I'm going to show you how you can get past that fear, how you can find that balance, that happy balance inside you. Because at the end of the day, you need to find that balance. Have you ever taken a trade and then found yourself looking at your phone every 2 minutes? Or have you ever taken a trade and not been able to sleep at night, get up at 2 in the morning and you're checking the trade? It means you've traded too much and you've got too much on the line, too much risk on the line. You see, there's a big difference in a person's psychology. If you have $1 million in the bank and you take 100,000 of that $1 million and you put it into a trading account, and then you risk $10,000 of that $100,000 and you start losing on that $10,000, you start losing that risk amount. You're going to have some annoyance. You're going to be upset. You're going to feel it. You're going to sweat. You're going to be, I'm losing money. You're going to be, it's going to be a problem for you. But the fear level is going to be insanely different. If you only have $100,000 and you put that into the trading market and you start losing $10,000 on it, the difference is the amount that you're losing. The difference is the amount that you've got on the line and the amount of risk that you've put down. That changes your fear level. Now, do you agree with me that that's going to change your ability to make good decisions? Of course it is. It's going to affect you in such a way that you won't know how to trade it. You'll start over trading it. You'll start revenge trading it. You'll start doing all kinds of silly things. You'll have fear of missing out. You'll make every mistake that every trader ever has ever made. Now, the big thing to understand in the market, I'm not going to the charts today, but every single system in the market, actually works. So if you went on a course and you learned a system, that system will work on charts. If you're just doing price action like we show you on a regular basis in most of the previous videos, go back and watch them, then you'll see that that also works. If you're trading an MACD system, that also works. An RSI, that works. They all work. Every single system in the market works. In fact, you'll find most pro traders on the floor, will actually only use the RSI to trade the relative strength. It's overbought, I'll sell, it's oversold, I'll buy kind of situation. If that's the case, then do charts actually make you any money? And obviously not. So how do you overcome this? How do you overcome this fear? How do you overcome this fear of loss? How do you get into the market and change your mentality so that you can actually make a profit in the market? How do you change your mentality so that you're not losing in the market, so that you can control your emotions, control the way you work, and control how you trade? Most traders, what they do is they tend to overtrade. They tend to overtrade. They don't know how much money they need to start trading. Can I trade? How much money do I need to start trading? They don't have a proper business plan in the market. Most people start trading with the belief that they can learn to trade in a week. Most people start trading with the belief they can learn to start trading in a day. And somehow they're going to take on all these pro traders in the market that have been there for years and years and years and years and years making money. When we all know, and we know the statistic, when I tell you the statistic, you all go, yeah, right. And I'll tell you the statistic, 70% of leveraged traders lose money. 70%. And you're all sitting there thinking, that doesn't matter. I'll be part of the 30% that win. I'll definitely be part of the 30% that win. Even though I've never traded before and I don't know what I'm doing. Because you think that you're going to get into a trading game and you're suddenly going to know everything in a week. It's funny when you become a doctor, you become a lawyer, you become a mechanic, you become whatever. It takes years of studying and internship and learning and experience to be able to do that properly. But when you become a trader today, I'm a trader. I know what I'm doing. It doesn't work like that. It doesn't work like that. And you don't turn money into millions overnight. Where in the world can you take $1,000 and somehow turn it into $1 million in a year? How's that going to happen? I mean, I don't even want to calculate the percentage increase on that. It's just insane. And not only is it impossible, it's just crazy. Theoretically, it can be done, but practically, it cannot be done. Nobody's been able to actually do it. There is a theory behind it. There is a way to do it. If you take 10 trades and you leverage to the max and so on, and there is a way to do it. But nobody can actually do it because nobody can actually win 10 trades out of 10. And that's the difficult thing behind it. Trading is 50-50. And most people will turn around to me and say, that's not true because I got a win rate and I've never lost more than 50% of my trades. That's because you're taking profits at $10 and $20 and risking $1,000 in each trade. That's not going to help you in any way, shape, or form. If you have proper targets on your trades and proper stop losses on your trades, you will not do better than 50-50 very easily. In fact, a trader that's doing six out of 10 trades is an insanely good trader. It's one of the best traders in the world. If you're doing 6 out of 10 trades, you're great. You're absolutely brilliant. You're doing 6 out of 10 trades if you're doing them properly. If you're reaching your targets, then you're doing it properly. You see, from my side, most of my profit on trading comes from just a couple of trades a year. Couple of trades that do really, really well, and they make loads and loads of money. And then there's a whole bunch of trades that actually reach target, which is a good target because it's more than my losses. And then there's a 60% mixture of losses and small wins. Why do I have small wins in my package? Because of the way I trade. I sometimes, or often, 90% of the time, I'll move the stop loss up behind the trade, and it comes back and takes it out for a smaller amount than what I expected to win. Or a lot of my stop losses get taken out on the smaller losses because I work on smaller losses and bigger wins. And that's the whole point of the strategy. And this is where I'm going to take the fear out of your trading today. I'm going to change your mindset in trading. Firstly, the first thing you have to bear with me on this and understand that the charts don't make you money. The charts give you the opportunity to manage your trade. They give you the opportunity to manage your risk. They give you the opportunity to get into the trade. Now, the first thing you have to understand is that you are going to lose trades. The first thing you have to understand is that you are going to have to lose trades. Did I say that twice? Did you get that? You're going to lose trades. That's the third time I said that. Trading's risky. Most traders do lose money. If you don't like losing money and you don't like risk, you probably shouldn't be trading. Now that you know that most traders do lose money, now that you know that you are going to lose trades, now what we have to talk about is the old story of how do I get around this? If I'm going to lose trades, and if I'm going to lose half my trades, how am I ever going to make a profit? How am I going to profit in the market if I'm going to lose trades? It's just never going to work for me, is it? It's going to be an issue. You're going to ask me, how am I going to make money? Well, it's simple. And it's so easy that you're going to fall on your back if you haven't heard me say it before. And it's as easy as having a strategy. So now what you've got to do is kind of forget about the charts, because that's where you're going to manage your trade, but kind of forget about them making you the money. Kind of forget about the win rates making you money and start listening to the business plan and the strategy. See, if you started a business today, you'd want to know a few things before you started, like how much money am I going to need to start this business? What capital am I going to need? How much profit do I want to make per year? Am I going to need staff? Am I going to need machines? Am I going to need this? Am I going to need that? There's a few questions you're going to ask yourself. And how am I going to approach this? But in trading, we tend not to do that. We just go willy-nilly into trading. I'm going to start trading today and I'm going to make loads of money. No, you're not. That's the point. You're not. So the way to get around this, I have a strategy that I follow religiously. And that is, I have more than one account because I don't like to put all my eggs in one basket. So that's not a bad idea to do that. But if you do have all your eggs in one basket, that's fine. But if you have an account and you have a brokerage account, leveraged account that you now want to trade, what you have to understand is that it's a leveraged account. In other words, you're going to lose more than what you actually have in the account if you're not careful. It's not spot. It's not one-to-one. One-to-one is different. You can set and forget that. There's no chance of you going bankrupt on that. But on a leveraged account, it can take out your leverage very, very quickly. So in other words, if you have a $25,000 account, you can in all likelihood trade $250,000 with it, or maybe $1 million, depending on what kind of leveraged account you've negotiated or you have. Now you get into trading, and you have this $25,000 account. I'm just using that as an example, guys. It could be $250,000. It could be $2.5 million. I don't care. It's up to you what you trade. The trick is this. If you have a $25,000 account, and I'm going to use smaller figures so you can understand it, but do yourself a favor when I do this. Imagine it being bigger figures, and then listen to what I'm saying as well. So I'm talking to you about a $25,000 account. And I say keep the account size the same at all times, even if it grows or gets smaller. In other words, you put all your planning into I'm trading on a $25,000 account and keep it like that. Try to withdraw your profits or don't include them. And when you consciously want to change the size of the account to trade at a different level, then consciously do it. In other words, it's a complete new plan. But while it's a $25,000 account, that's it. Then you say, I'm going to risk 1% on every single trade. The point here being risk the same amount on every single trade. Doesn't matter if you risk 2%, doesn't matter if you risk 10%, doesn't matter if you risk 0.5%. Whatever you feel comfortable with makes no difference. Just bear in mind that if you risk 10% on a leveraged account, in all likelihood, you're going to lose your account. So that's why we risk 1% on every single trade. So 1% of a $25,000 account is $250. And you say, well, it's only $250. I can lose $250. But here's the crux of the matter. If you lose 10 trades in a row, that becomes 10%. So that's $2,500. Completely different ballgame there, isn't it? But what if you are risking on a $2.5 million account? Work out the figures then that you might be losing. So 1% is a fair amount. So we keep it at 1%. 1%, $250. How do I put a $250 stop loss the same on every single trade? Now, it doesn't have to be exactly 250. It can be 260, it can be 270, it can be 230, just close by. The trick here is when you decide to take the trade, and this is where you go back to the charts. This is what you need the charts for. You go to the chart and you have a look at the chart and you say, at what point would my trade be invalid here? If I was to put a stop loss here, if I was to say the price gets to that point, I don't want to be in that trade anymore. That's where you want your stop loss. Now what you do is you choose your stop loss area before anything else. Well, you choose your trade, of course, and then you choose your stop loss area on that trade. And then you work out the size of your trade back to the cost. Now you know the size of your trade. And then you work out if that trade can make you more on the win than it will lose. In other words, you're risking $250, so you just want to make more than $250. I don't say to you it has to be 2-to-1. I don't say to you it has to be 3-to-1 or anything like that. You can be 1-to-1 or just over that. But as long as you're making more on the win. And a 1-to-1 trade is fine. And I say that because what you can do in every single circumstance is when it moves up into a profit is move your stop loss up into the profit at first break even and then profit and then trail it behind it and try and make as much profit as you possibly can. That's how you manage the trade. Now, if you manage your trades properly and you manage them with that structure, then the loss amount becomes irrelevant. It's no longer as relevant as you think. In other words, the loss amount can be $25,000. It can be $2.5 million. It doesn't matter as long as you're making more on the wins. As I said to you earlier, only a couple of my trades make a huge gargantuan profit every year. And then there's a whole bunch of them that make target, which is normally more than my loss. And then I have a large portion of trades which are small losses and small wins, which make up the rest of the pile. The small losses are negated by the big wins. Once you get used to this psychologically, then the amount of the loss doesn't matter anymore because you know that over a period of 10 trades, you're going to make a profit. Or over a period of 20 trades. It depends how good your trading is and how lucky you are in the markets. Because what you're doing is you're looking at the market and saying, overall, I'm looking not to time the market. I'm looking to make a profit with a strategy. The whole way that I came about this strategy was pretty simple. It was when those traders turned around to me and said, Rob, you can't time the market. You need to have time in the market. And I thought to myself, if I can't time the market, if I have to have time in the market, what am I doing trading? How am I going to make money trading? But there are traders out there making money. In fact, there are professional traders out there making money on the market. How do they do it? They must have a way of doing it, obviously, because if they can do it, surely I can do it. But they're telling me I can't do it if I have by trying to time the market. I have to have time in the market. How am I going to get around this? How am I going to work a system around this? And then the light bulb came on. Boom, this is how you do it. The only way to do it is to forget about trying to time the charts. Forget about trying to make more wins than losses. Start working a plan as to how to make more profit than losses. Because what this is about is making a profit. This is not about making the losses. On that note, I hope you guys make lots of money. Don't forget, come and join the members area. I've got a members area where I put a trade of the day and all that sort of thing. I'm busy building a course for you guys as well, so that'll be there soon as well. Have a look at that in the members area. That's going to be all available to you. And then, of course, if you've watched the video this far and you haven't subscribed yet, come on, subscribe, man. You've got to subscribe at least. But on that note, thanks for watching. Don't forget to watch the last video. It's really important because they might actually show you a little bit about charting as well. And make lots of money. Have a great week ahead. Cheers, ciao, and bye.